It is July 23rd, 2017, looking towards a new 4-hour candle being printed in 12 minutes. So, let's go ahead, let's check out the AUDUSD as per a request. Now, the intraday levels are pointing to more bullish movement. So at this time, I would only be looking for buys. So what could be a good buy limit area? We've identified here one level where, well, here, let me show you this buyer's interest place on the daily real quick. We can see why we could be led to believe that buyers would be looking to offer support, really the demand to get into the market. And seeing how this candlestick printed, it would be very likely to see the price push down into this gray zone right here. Looking on the weekly chart, we can see that we did tap our 200 exponential moving average. Now, we have cleared up a lot of the space in between that. On the monthly, however, there still is a significant distance. If we use our trend line, we're talking about 510 pips until we would essentially be tapping or trading beyond where the 200 is right now. Coming back to the intraday levels, this is uptrending the way that I see the charts. Now, where could some other areas of interest be? The first one that is very clear to me is around the whole 78500 level. So we're going to go ahead, we're going to put that up. It is at the top of our zone. It has come into this big bullish candlestick just a little bit. And of course, there's going to be some confluence with our 200 EMA. Now, seeing that the 61.8 is down here, we also have our 38.2. I would imagine if we were to go ahead and just enable the curve of the 78.6, it is also trading quite below. So this fib wouldn't necessarily be valid anymore. I would look to redraw this. Now, you may be wondering, okay, where would you put it? Let's check out the weekly once more. Let's see what price is looking like if we go from the most relevant and recent high in the 2013 year down to the low. So what do you know? This Fibonacci could be perceived as valid simply because we have our 38.2 rejection right here. But I personally would not trade off of this in particular. So if we were to go ahead and remove that, just for visualization purposes, we will go from the high to the low. And on the monthly chart here, we're noticing now from this high point in 2011 down to the low in January 2016, we're talking a movement of about 4,200 pips. So looking at this, seeing the confluence, this would be a valid Fibonacci in my opinion. Does it help us on the intraday perspective? Well, yes, because it gives us some more confluence, and this would essentially be our area of demand that I would be looking at. So if we were to put a buy limit right now, price would have to move to the downside 52 pips just to touch the upper limits of our buyer area of interest. This is not considering the spread. And of course, we've given ourselves 15 pips of playroom for if we were looking to pick up orders. Now, where would we put a stop loss? Let's just say we enter the trade right here at our low point on the 23.6, buy limit at 7835. What we would do, what I would do, I would personally be looking to have about a 35 pip stop loss on this around the 7796 level. So I'll go ahead, I will clearly identify this price level for you. 7796 with a potential reward. I mean, really, we're going to have to look at the daily for this one just to see what makes sense. And we're going to go now, we're going to hide that Fibonacci just because we've created a zone. We have an area that we're looking at. We have our oval, which from the top area of our buyer level of interest, talking about 160 pips of profit. So this trade potentially could be a 4-to-1 risk to reward ratio if you were patient to trade through all of this. Now, I wouldn't necessarily be entering any sells at this time simply because this candlestick, it is not looking like something I would want to enter on. Now, we could get one more tap up into this whole high zone and then see price go lower to where we have identified buy limits. And if you're looking to play both sides of this trade, it is a little bit risky, but something you could say is have a sell limit around the 797 level with really a 25 pip stop loss would be sufficient, because anything more than that, I would be expecting some big pushes up beyond the 0.8 psychological level. Now, this is a very powerful area because we are hitting this figure right here, and we did come very, very close to it on the 19th, so we can see on this chart very clearly. Taking one quick look at the range chart, still getting some bullish indication. Looking at the Renkos just to do a comparison, this is a 42 pip Renko chart. What we just looked at was a 42 pip range chart. And really these bars right now, I mean, sure, we're getting a bearish one printing, but there's a lot, and I mean a lot, of bullish momentum picking up here in 2017 for the Australian dollar. Now, on August 1st, we do have the monetary policy upcoming for the Aussie, so we're going to have to pay attention to this pair, see how it moves. We can expect an average range of about 50 to 60 pips each day, but really we'll just have to see, given there are no red fundamental folders until the middle of the week, talking about Tuesday. GBP AUD. Now, we did take a look at this in the most recent training video, but I am bullish on this pair at this time. The reason why I am bullish, I'm going to explain to you in the next video.